You ever taken a minute in thinking about how important credit scores are when it comes to lending decisions, when it comes to getting loans, when it comes to getting a job, getting a place to rent? Credit scores are what they use to really determine your credit worthiness and if you're going to have the ability to repay. In today's video, we're going to be breaking down the importance of the credit score and where we're seeing them used in kind of a broad spectrum, with number one being loan approvals and the interest rates, guys. Now, financial institutions, credit unions, even online lenders do use a credit score to determine what your rate is, which means better credit score, lower rate, lower interest, lower payment. Lower credit score means higher rate, higher payments, higher possibly loan denials. It is really the catalyst for your lending and your financial journey, which of course can have a huge impact in everything else, including how you're budgeting when it comes to the money that you're bringing home in relationship to the money that you're sending out or the money that you're paying in debt. If you have a poor credit score, you are going to have a much higher rate for pretty much everything, including credit cards. When you look to borrow, you are going to get and qualified for a much higher rate, which could cost you tens of thousands of dollars over the first couple years that you are starting to borrow money with that lower score. Now, higher score also generates lower interest rates, meaning again, the likeliness of you getting approved is going to be definitely a lot more favorable, but it also allows you to borrow money a lot cheaper. They said between having great credit and having poor credit usually costs someone about $500,000 over their entire life, because essentially when you think big picture, you're going to be paying more for things forever. If you do not spend the time and really be diligent improving that credit score, you're going to pay a higher rate than someone who has good credit for your entire life, guys. Do not do this to yourself. Number two, we look at credit card approvals. Credit scores influence not only credit card approvals, but also the rate that you pay for a credit card. Where you might have great credit, you get a 12%, you get an 18, a 22, depending on the rate that you get. Even at some financial institutions, if you have a 690 or better credit score, your rate is 9.75, and that is a fixed rate, guys, for a credit card. That's right, it is not a variable rate, it is a fixed rate, with the average credit card rates running around 24%. If you're an individual with poor credit, chances are you're more in the 30 to 36 range per month that you're paying in interest, guys. It's kind of incredible. When you look at your statement, take a minute and really look at your statement. If you got it online, pull up the app, pull up whatever and however you pay your bill. Look exactly what it says in there. Most of them will have a little block that say, if you make the minimum payment, this card will take you 11 years, 15 years, 22 years to pay off in its entirety, just making the minimum payment. There is no reason, guys, that you want to go use your card for Christmas, pay for it for the next 22 years because you're making those minimum payments. Now, you can also, improving your credit score, apply for a different card, get a much lower rate, do a balance transfer, and slowly eliminate that debt that, again, you're not going to be spending, 15 to 22 years paying back. Number three, we get into renting a home. That is right, guys. When it comes to renting a home, a majority of landlords will do a credit check before they will rent out to a property, which if there's a place you're really interested in, if it's, good location, good schools, if it's one that you want to get into, credit score could be holding you back. With a lower score, chances are you're not going to get approved because you're not proven and have not shown the willingness to repay. Higher credit score enhances one's rental applications, may lead to more favorable leasing terms or even more favorable dollar amounts, which means that a landlord might take a little bit more risk on a lower credit score, but in turn, to get that kind of risk reward, kind of the give and take that they have, they will charge you a higher rate than they will for someone else, which means, again, credit scores can affect when you're renting a home. They also do the same for apartments. When you go to get an apartment, they will run your credit. Some of them even report to your credit, which means if you're paying your monthly rent, chances are, depending on the complex that you rent, you will have your rent reported to your credit. And I've seen this more often in the last couple of years. Now, number four, we look at insurance premiums. That is right, guys. From good credit to bad credit, it is kind of crazy, but a lot of insurance companies use credit scores to determine premiums for auto loans and homeowners insurance. Good credit score means you're going to be paying less. Now, how much less, you might question? Between a good score and a bad score, some companies have charged 25 to 30% more monthly premiums for someone who has poor credit. So again, big reason to really reevaluate your insurance. Make sure you're with the right company and the company that you're going to get the best rate, but also the best service. Number five, we look at employment opportunities. That is right, guys. Part of the employment process, a majority of larger companies will go and do credit checks. So again, if you're looking at a job, you're super excited, the interview went great, they pull your credit. Unfortunately, it's not on par, or you have damaged or poor credit. All of a sudden, you're getting a denial letter that you did not get the new job, and someone that had an A plus credit rating did get the job. Positive credit history reflects positively on the individual's reliability and trustworthiness. Now, there have been a ton of studies about this. Is credit scores in relationship to call-ins, to sick leave, to issues with the job. There is a correlation between those, between the reliability and the trustworthiness of the individual, if they have a good credit or bad credit. So again, take personal accountability, guys, and really think about where you're at with your score. Now, security deposits. A lot of landlords and utility companies may require higher security deposits from individuals with lower credit scores. That is right, guys. They don't want a month rent. They might want 2 months rent just because your credit score is lower. Utility companies might want something to hold as a security deposit because they're not sure, kind of questionable on the credit report, if you're going to repay them and if you're going to repay them on a timely manner. Now, it does cause companies or cost companies money to get their money. So if you're paying your bill late and they're sending you late notices, that's why a lot of these companies do have late fees, is it does cost them money not having your money. Essentially, for them to be able to collect, it is really substantial and really important that you do pay everything on time. Now, higher credit scores also give you negotiating power, guys. You have the ability to look for more favorable terms and conditions when it comes to loans, when it comes to credit cards, if you have a good credit score. Now, for instance, using the same scenario, if you have a credit card that's at 30%, you could call that credit card company and say, hey, I want a much lower rate. What are you guys offering? If they don't offer what you want, you can look at other avenues, look at other cards, because you have the credit score to back it, giving you the negotiating power with a lot of different companies. Number eight, we get into the financial planning and budgeting. Regularly monitoring, maintaining good credit score shows financial discipline. If you have a budget, which a majority of people do not, I recommend budget above everything else, guys. You have to make sure that the money you're bringing it home to the money you're spending, you are not in the red. It is not going to work if it is. It encourages financial habits, effective budgeting to ensure that all of your bills are paid on time. Like we talked about in the last video, 35% of your score is your payment history, guys. Major, super important to not miss any payments. Set them up automatically. When it comes to credit cards, when it comes to loans, even making the minimum payment automatic is better, guys. Go ahead, set it on. As long as you know the money is there, the bill is going to be paid. There are no late fees. Your credit score is going to be stellar because you're paying everything on time. There are no late payments. And number nine, we get into the access to financial products. That is right, guys. There are a lot of financial products that do require a significant credit score or a higher credit score, including personal loans. Mortgage loans, which are government regulated, require a minimum credit score. If you fall below the minimum credit score, unfortunately, they cannot legally lend to you because of your credit score. It really opens up the entire range of financial products, which again can make your life easier, can make your life more efficient, and also can make things cheaper. And the final one we look at is building a positive reputation with the credit score, guys. Maintaining a good credit score contributes to positive financial reputation. This can also reflect responsibility in how you manage your credit and really the overall fundamentals. If you're going to work and you're worried about your financial plan, you're worried about your budgeting, you're worried about your credit score, all of the time, these are things that are relatively easy to manage, and they get a lot more easier, and they really do get easy when you're used to managing it and managing it automated, taking it kind of out of sight, out of mind, making sure and knowing that everything is going to be paid on time. So guys, definitely wanted to cover the impact of the credit score and why it is so important as a driving force within your financial freedom and really being completely debt free. That'll do it for today's video, and I'll catch you in the next video.